Look, I mean, we were surprised on the hawkish side, to be fair, right? So we had about 7 hikes for 2022. We thought that they would end in 2024, but they clearly have brought that forward to 23. But just look at 22 itself. There are 7.5 hikes, so to speak, at least the median dot plots, right? So it means that at least somebody is talking about a 50 basis points hike between now and the end of 22, and not just only 25. So my sense is that, look, they could have been much more hawkish. I think that if you look at their end targets, you have, the neutral rate is supposed to be 2.4. They are willing to take it to 2.8. They still have inflation in 2024 above their targets. So if they really want, they can be a bit more hawkish than that and move more aggressively. So we were a bit surprised by the hawkish tone, just a bit. We had 7, they took 7.5. I think on your question on QT, I think instead of June, it's going to be brought forward to May. But I also think that the FOMC was much more hopeful. They actually thought that even with these kinds of rate hikes, the U.S. economy would still have higher than trend growth rate, and that inflation would go down, and the labor market would remain around 3.5%. I think those were very, very hopeful indicators that they believe that the economy is strong enough to take these kinds of rate hikes.
Jahangir, do you believe that, though? Because a number of experts we've talked to say, look, even at the rate they're going right now, 7 hikes and the terminal rate at stretched out to 2.8%, this is going to mean in 12 months' time, the U.S. economy is in recession. You don't think so?
Look, I think that, it is easy to make that argument saying that, look, this is what happened in the 2015 to 2018, right? So when the Fed went on a full swing of rate hikes, then they were stopped in the midway because the economy couldn't take it and the financial markets couldn't take it. I think life today is somewhat different from 2015 in the following way, that if you look at the household's balance sheet, it is far stronger than it has ever been. In fact, it's much stronger than it's been even pre-GFC. You have significant amount of excess savings in the household sector. You have a significant amount of excess savings in the corporate sector. So I think the balance sheets are significantly stronger, and I do think that the economy can take a significant amount of rate hikes without, some sort of an asset price event taking place or even the economy slowing down. On the other hand, I think the bond market is telling you that they do not believe that. So, to the extent that you need to respect the bond market, I think you still have to give credence to the idea that, sometime in 2023, they will be stopped out. It's a difficult call, but from the economics point of view, I think we agree with the Fed that the balance sheets in the corporate sector, the balance sheets in the U.S. households, this time around are strong enough to take taking the rates right up to 2.8.